address the growth aspirations that we have.
Okay. You spoke about the edutech sector, and you have a fairly decent exposure to that, around 23% of the.
Good morning, ladies and gentlemen. Welcome to Business Today Television. It's a fresh start to a week, which is also truncated, tomorrow being a holiday for Independence Day. Apart from that, we've seen continued weakness creeping into Indian equities, and that's creating a problem for bears on the bulls on the Wall Street. Let's see what the main headlines are, and then we'll come back to the markets. Indian stocks may start a truncated week. Indian stocks may start a truncated week on the back foot as traders remain in profit booking mode on major indices, even as broader markets continue to buzz with strong gains in select mid caps, PSUs, and government owned banks. And all eyes on Monday will be on consumer price inflation data for the month of July. Economists expect a number of 4.1%, but rising prices of vegetables just might play sport. Welcome to Business Today Television and Markets Today. We are on a fresh start on a Monday. Let's look back and see how the markets have performed on a weekly basis, since that's what the measuring parameter will be. In front of you is a Nifty chart on a weekly basis, and as you would see, two major things happened in last week's trade. One, for the third week in a row, we ended in losses. So that's the reason why you see three negative red bars in front of you. And more importantly, bulls lost the very crucial support of 19,500 to the bears on the Wall Street. As you would know, Nifty shut its shop on Monday at 19,430, somewhere down 114 points. Overall, if you see, the index has shed about 580 points from its all-time psychological high level of 20,000, which was there in the last week of July, somewhere like 21st, 22nd of July. From then on, it's been a sideways to consolidative to a weak pace, coupled by a lot of macro developments that have not exactly gone down well with the bulls on the Wall Street. Foremost, it was the Reserve Bank of India and its credit policy, which announced that inflation was a bit awry, and they would do all that they can to control it back to its original set expectation of 4%. So at about 5.2%, 5.3%, which is the RBI that has set its latest number on, there's a long way to go for inflation to come down. So that was one negative that the market grappled with last week. And the fact that our foreign friends have been consistent sellers over the last week, something like 4,700 crores worth of net sales on Indian equities happened by foreigners. If you look at the entire August number, that's about 7,540 crores. So that's the issue. Sustained profit booking by not only foreign institutional investors, ultra HNIs and some select traders. It's also the fact that the market continues to grapple with this problem of heightened inflation forecast by the Reserve Bank of India. That in turn means that interest rates are not likely to come down fairly soon. More importantly, today is the day for CPI inflation to come in. Expectations are around 4.1%. But if you shop for your kitchen, you know how vegetable prices are faring, and that could probably be another negative for the market if the number comes above 4.1%. Apart from that, Tuesday being a holiday, we'll see market premium on options contract fairly sharply. So you have to be very, very nimble if you're on the long side when it comes to options. Secondly, and more importantly, we have something good news for bulls, which is that broader markets are conducive to buying as well as holding, and that's visible in the kind of rallies that you've seen in under-owned, undervalued and relatively inexpensive stocks, which primarily belong to the public sector space, such as Hind Copper, which belong to the public sector banking space. You know the names. Indian Overseas Bank was the top gainer when it came to the NSE 500. Apart from that, we've seen a very, very strong rally coming into PNB, Canara Bank, and of course Bank of Baroda. See, these are low ticket items preferred by retailers, and any dip 1 or 2% fall is what you see buyers coming in blind blocks. Apart from that, we see a lot of traction coming in for metal space. In copper, like I said, it's fairly strong. So if you are a professional trader, only then come into the market as far as the Nifty is concerned. Otherwise, it will be very choppy, very volatile. The option trading range is somewhere like 19,400 to 19,600. But as you know, things could sort of slip towards maybe 19,200 in the days to come. Let's look at what is going to happen on the Bank Nifty, and there is a weekly Bank Nifty chart which you see in front of you, and it's posted losses for 3 continuous weeks. That's roughly you will imagine 14 trading sessions. Now the problem is that if you see major charts, which is HDFC Bank, Axis Bank, ICICI Bank, all of them have given deliveries which are higher than weekly averages on Friday. So that's a pain point that's coming in. So the downside on the Bank Nifty looks a bit more than what you see on the Nifty, but the fact is that PSU banking basket is providing strong support. But the problem there is that you don't see much of weightage for PSU banks in the Bank Nifty. So Bank Nifty is likely to be more volatile than Bank Nifty. The trend here is weak, and that's the reason why you see a lot of traction coming in for bears on the Lal Street when it comes to both the Nifty and the Bank Nifty. As far as the trading range is concerned, it's slipping lower and lower. Now option data suggests that 44,000 to 45,000 is the range that you might see for Bank Nifty today. Remember, tomorrow is a holiday, so options premier decay will happen. The Fin Nifty expiry that is supposed to take place every Tuesday will be on Monday. So it adds another layer of volatility when you look at how markets are structured when it comes to Bank Nifty. Plus the fact that a lot of ultra HNIs and foreigners have taken short positions in the derivative space when it comes to Bank Nifty. So these are the two sectors or stocks, these are the two segments that I'm looking at. Let's now pay attention to what the foreign market is saying, which the options market is saying, and the stocks that I am watching are again very, very high beta. Most of them are on the public PSU domain. Let's start with the current market favorite in the railway theme. It's IRCTC. The stock closed 2.5% higher. This is a bullish phase that we are discussing. 3.5% rise in open interest, and deliveries were 1.5% higher. Apart from that, the auto ancillary space is sticking merrily towards the green. One counter which has got both fundamental investors alike as well as traders is Exide Industries. It closed 2% higher, 270, and the open interest was 3.5% higher. Delivery statistics were pretty okay. These are the two stocks. As far as other stocks are concerned, I would imagine Motherson 9820. It's likely to open up into the 3-digit mark. Very strong delivery statistics and a 6% rise in open interest. These are the themes that I'm looking at, but as good a time as any to speak to Sunny Agarwal. He's the Deputy Vice President and Head of Fundamental Research at SBI Securities. Sunny, welcome to the show. And how does Monday look to you fundamentally when it comes to the broader market? We've seen foreigners pressing sales. We've seen worries coming in over the inflation data as far as RBI is concerned. And overall, bulls appear to be on the back foot.
Yeah, good morning, Shail, and thanks for having me on the show. So basically, again, I feel the entire month of August is likely to be a range-bound market. If I look at a Nifty or from a Bank Nifty perspective, so what I feel is that 19,300 is a good support on lower level, and 19,600, 700 can be the resistance as of now. But having said that, there are many stock-specific opportunity which one need to focus on if somebody is a medium to long-term investor. So there are many sectors or sub-sectors where there still lies an opportunity. So the entire PSU basket, whether it is on NBFC side like PFC, REC, or for that matter on railway side like RVNL, Railtel, or for that matter companies on engineering side like Engineers India. So there are a lot of opportunity which are available in the sub-sectors. Sector like, for example, a smart meter, where companies like Genus Power can be a clear winner over the next 3 to 5 years. Or for that matter, in railway wagon space, companies like Jupiter Wagon, Titagarh Wagon, there. So there are a lot of opportunity across the board, large cap also and mid cap also. On the banking side, one can look at PSU Bank. There is still a lot of scope of valuation re-rating, asset quality, top-notch asset quality, healthy growth outlook. So I feel one need to be very stock specific rather than looking at a broader indices for the month of August.
Wonderful, Sunny. Now is as good a time as any to discuss wonderful picks. Let's start one by one. Given the fact that markets have corrected substantially from 999 to somewhere like 19400, where do you find value? Where would somebody be happy if one took a punt for about 1-2 years in a sector or a stock where you feel that value is supposed to be had even now at current levels?
Yeah, so there are many. So I would like to divide the discussion into two parts. One is large cap companies. Obviously, banks are a backbone of any economy, and if we are poised to grow at 7 to 8% in a real term GDP, I'm sure banking credit will at least grow at to 10 to 12%, assuming 1.4, 1.5 multiplier effect. And I would like to ride this rally through private banks like HDFC Bank, where there is still there may be some overhang in terms of the merger uncertainties. But what I feel is that in terms of valuation, HDFC Bank offer a decent value at the current juncture. Banks like ICICI Bank, Axis Bank, although they have corrected post June quarter numbers, but at the same time, one can expect 10 to 15% return in ICICI Bank and likes of Axis Bank. At the same time, one can look at PSU Bank, larger size PSU Bank like Bank of Baroda, Canara Bank. There also lies a lot of value. But one need to temper their expectations.
Is IDBI Bank?
Yeah, so definitely on the PSU side. So IDBI Bank is not a PSU; it's a kind of semi PSU owned by LIC. So IDBI Bank is one of the banks which we like in terms of valuation. So their asset quality has improved significantly over the last 2-3 years. At the same time, if you see there all the operating metrics, whether it is NIM, whether it is CASA, whether it is ROA, whether it is ROE, you name the metric, and the bank has improved, delivered on all the numbers. And I'm sure with the bank on the block, the new buyer, private player or private equity or any private bank who is likely to acquire this IDBI bank, they will have a lot of pleasant surprises in terms of recovery. So what I feel is that bank is one of the structural play to ride on the Indian economic growth story. Apart from that, I would like to ride this story through auto sector. So auto, after a long time, we are seeing a good rebound in terms of volume, whether it is a two-wheeler segment, whether it is a commercial vehicle segment. Passenger vehicle was anyway was doing well since COVID. So to auto and auto ancillary is one of the sector which we like. So within that, we would like to ride the passenger vehicle story through Maruti Suzuki. Again, the Maruti is likely to acquire that Suzuki Motor Gujarat plant. At the same time, they have went on record that they will double the capacity over the next decade. So Maruti is the long-term structural play which we like. Ashok Leyland, we like if somebody want to ride on commercial vehicle story. There is a lot of scope of margin expansion. So what we feel is that Ashok Leyland currently trading at a price of 185, 190. The fair value is around 220, 225 rupees. Ashok Leyland we like. In the two-wheeler space, we like Eicher, TVS Motor. Both have got their competitive advantage. So the that companies we like. And in auto ancillary, there are many players like RK Forging, Gabriel, Bosch. There are whole lot of opportunity in auto ancillary segment. We also like infrastructure and cap goods space. So within infrastructure, we like companies like PNC Infra, rock solid business, healthy order book, decent valuation. So one can write that story through PNC Infra. On the railway side, RVNL, Railtel, we like on the infrastructure side. If someone can ride this sector indirectly through cement, so companies like Ambuja, Ultratech, that can be ride on the capex story or housing story of the booming housing sector of India. So a whole lot of opportunity across the sector.
Okay. So today's top pick from Mr. Agarwal is IDBI Bank, and let me just share some data. About 95% of equity of IDBI Bank, which is owned by the LIC of India and of course the government, is there. And as people would know, there has been a huge effort by the government to privatize this bank at about 64 rupees. The bank is trading at a price to book ratio of about 1.8, and if you see the other details, it has a very basic kind of a structure, 4,160 crores worth of 12-month earnings as far as the profit after tax is concerned, and a market capitalization of 69,000 crores. This is what Sunny has suggested to us, and let's now welcome another guest, Akshay Bhagwat. He's the Senior Vice President for Derivative Research at JM Financial Services. Mr. Bhagwat, welcome to Business Today Television. Let's first start with the Nifty. 3 weeks of continuous downdraft, some kind of problem on the macro side when it comes to inflation, and of course our foreign friends being net sellers for the month of August, somewhere like 7,000 crores. How do you see the overall structure of the market, especially Nifty?
Good morning, Shailji. Thanks for having me on the show. So first of all, on the Nifty technical setup, what we understand is last week we did slip from the 19,600 resistance zone, which is a very crucial level as we see for the market for the August series. Now we are heading for the key recent lows. That will be the test for the Nifty as to how it plays out at the 19,300 zone. Because a few trading sessions back, if you recollect, we had a small bounce back from the 19,300 level to the 19,600 zone. So the chances are good that the market would hold on, or the bulls will try to get in at the 19,300 or maybe 350 zone plus minus 50 odd points. But that's where the key support stands for the coming week. So we will review how it plays out there. But as far as the data points go for the Nifty, the The India VIX is trying to pick up a bit at 11.5% where it currently trades. So that's an indication that slight nervousness is getting back into the system as we stand for the current August series. The long short ratio, which the FIIs are currently placed for the index future, stands around 40 longs to around 60 shorts. So that's a slightly bearish positioning, which just indicates that, for the August series, there might be the Nifty might be on a slippery turf for the remainder part of the series. But if you were to have a broader view for the entire month, our belief is that 19,000 is a very strong support. By chance, if in case we drift there going ahead in probably in the later half of the August series, if we do, then that would be a good opportunity to enter into the market again. So for the August series, the broader range is 19,000 on the lower end and 19,700 on the upper end. For intraday trade, day trading, or maybe for the next couple of days, 19,300 comes into play, and our belief is that there will be a relief rally bounce from the 19,300 zone. Moving on to the bank index is crucially poised at a very important juncture, a pivotal level, a possible head and shoulder neckline where it currently stands on the technical parameters. You can say 44,000 roughly is the head and shoulder neckline for the bank Nifty, and that will be tested during the week as to how it plays out there. Because in case 44,000 were to break, that's a reversal or a negative breakdown for the bank Nifty index. But we will see once it happens. As it currently stands, we are at the neckline. So the next couple of days are crucial for Bank Nifty, how it plays out here. If it bounces up from the 44,000 level, you can expect a relief rally pullback in Bank Nifty till 44,500.
Right. And as luck would have it, or as data says, 44,000 is a very, very strong support when it comes to the options chain for Bank Nifty. Remember, Bank Nifty is much weaker than Nifty when it comes to weekly charts, and again 3 weeks of continuous losses. We shouldn't be much worried because you've seen 4 months of continuous gains on both the Nifty and the Bank Nifty, the broader markets as well. So April, May, June, July were fantastic for equities. August is a month where we see consolidation and some gains that are coming, some gains that are going away from the market. Akshay, let's stick around with the technicals. One or two top picks that you would like to discuss on the long or the short side for today's trade.
If you look at the broader market, still there is a lot of juice left in the mid cap index. Stock specific action is good. It's only the big boys of the market who are kind of gone into their shell. If you look at Infosys, Reliance, HDFC Bank. So our recommendation is, for the time being till the market stabilizes, you should stay away from the big boys of the market. Try to get into the mid cap space where there are green shoots. So we see Voltas as first buy side trade for us. Voltas had a stellar run in the month of August, and even it started in fact from the later half of July, and 750, 760 was the bottom from where we saw a rally till 840, 850. The results have been a bit of a dampener. We have seen some bit of a profit booking around 850, but we believe there is a lot of upside still left in the stock. So we would recommend to buy Voltas around the level of around 825. You can even average it out on dips till around 815. And we believe that this stock is headed for new highs for the month of August. Possibly you might see targets of 850 to 870 on the upside. Your stops or for risk management on this trade would be around 795. So that's the first buy recommendation I have on Voltas. And the second trade it's more on the trading side. It's for short term. It's a sell recommendation on the HDFC Bank. Now the reason is because HDFC Bank on Friday's trading has broken an important trading support at 1630. That's an important development for the stock as far as the short-term parameters goes. A slightly negative placement. Derivative parameters are signaling that shorts have been built. Even the technicals are signaling a weekly breakdown on the charts, and possibly we are heading for the lower end of 1580 to 1550. So you can short this stock only for short term, probably with a week's time frame, with a stop loss of 1650 and a target of around 1580 to 1550 on the lower end.
Right. We'll show you the long-term chart of HDFC Bank on a daily basis, and about 1680 the stock is somewhere trading to its lowest level since 21st of June, and very close to its 200 DMA of 1608. The other issue with HDFC Bank is that the CEO, Mr. Jagdishan, pointed out over the weekend that funding costs because of the merger with its parent HDFC will see an uptick for the next 1 or 2 quarters, and that would mean probably lower margins. Let's get Sunny into this conversation. Mr. Agarwal, what else do you think is worthwhile when it comes to HDFC Bank? Given the technical weakness that you see, where do you think is a good fundamental support based on earnings expectations that would make HDFC Bank a good stock to add to your portfolio?
What I feel is that any level close to 1600 is a good level to add for a medium to long term investor. So definitely quarter or two we may see some pain of mergers wherein the margins may come under pressure. There may be some increase in cost of funds, so on and so forth. So Street would love to first observe the quarter or two before taking a concrete view on HDFC Bank. Although the short term outlook is clouded, what I believe is that in long term, there is a humongous opportunity for HDFC Bank and HDFC Limited combined entity to cross sell the product. So if you remember that majority of the customer of HDFC Limited were yet to be serviced by HDFC Bank, and there is a huge scope of cross selling of products for customers of both the entities. So what I feel that short term, although it may look clouded, but if somebody is a medium to long term investor, one should have an SIP approach in HDFC Bank, wherein one can gradually accumulate the HDFC Bank near 1600 level for next 3 to 6 months.
Let's go to now Akshay and find out about his views on the broader market. Apart from the Nifty and the Bank Nifty, he's commented on voltas on the positive side, and he finds a bit of a weakness coming into HDFC Bank. Akshay, how about State Bank of India? The earnings were fantastic. It is now India's most profitable company based on profit alone. What do you see in the charts?
Well, if you look at State Bank of India's price action, it's been a one-way fall post the results were seen, because markets did not possibly like the way the results came out for State Bank. What I understand is the prior swing low of around 585 has been breached in this weakness. The derivative positioning suggests 600 to be an area where strong call writing is present. Also, shorts are present in this bank. So I believe the support base which you can look at to possibly buy or add State Bank would be around the 5555 zone. So we are at 574, still around 20-25 odd points from where the key support lies. The broader technical positioning as month of August goes is still weak. It did see a small respite in the last 4 or 5 trading sessions, but considering the broader setup, I would say that it's better to wait for longs to be added in State Bank. Wait for 5555 levels. If you want a shorting candidate for a couple of days, then this can be one of them. So yes, wait and watch for State Bank for 5555 levels as a buyer. For State Bank for 5555.
Right. So that was the view on State Bank of India. Sunny, would you like to comment on how numbers were on State Bank of India in this quarter?
Sorry, Shail, I can't comment on State Bank of India due to compliance restriction. We are not allowed to share any news on SBI and its associates and subsidiaries.
Absolutely. My sincere apologies. I just completely forgot the parentage where you work at. My sincere apologies, but let's take this forward. Okay. It's about 8:59, and we'll just have pre-open trades to deal with. But here's the status so far. We've seen weakness creeping into the Dalal Street over the last 3 weeks, and the fact is that markets are at about a month low, and actually 2 months of lows, And the fact is that we've seen foreign funds being net sellers on the equity markets for last week and for the entire month of August. Let's look where the action is, and at the moment metals are shining brightly. The top gainer on the Nifty is Hindalco, up 1% at 468. Axis Bank has opened the green 0.8% higher, 944.80. Hindustan Lever is in the green, 0.6% higher, 25.16. Nice ticks on Titan, Hero Motors, and HCL Tech. The Nifty is opened about 73 points lower at 93.50. So it's a down tick. Let's look at the F&O space, and let's look at stocks that are in pain. The Adani Twins Enterprises and Adani Ports are showing a downtick of 10%. Remember, there was this issue with their auditor, and that's not taken very well by the market. Let us see how they settle in pre-open trades. But for the moment, I'm seeing 720 on Adani Ports, down 10%. Remember, this is the first down circuit filter of 10% on F&O trades. Adani Enterprises is also 10% lower, 22.85. Let's move apart from Adani to stocks where you can see some nice ticks on the green side. Remember, the Nifty is now down just 50 points, 19,378. Amongst heavyweights, let's look at stocks which are opening strongly. TCS 0.3% higher, Axis Bank 0.2% higher, Kotak Bank about 0.1% higher, and then we have down ticks coming in on HDFC Bank, as rightly pointed out by Akshay, 0.5% lower. That is what it is opening at in pre-open. ICICI, Bajaj Finserv, Bajaj Finance also in the red. Let's look at broader markets. Cash is where the action is, and let's look at gainers where you see some strong upticks. Okay, amongst the heavyweights and high beta, Sunny had mentioned he likes RVNL. It's opening 2% higher, 128.60. NHPC 1.7% higher, 51. I see a green tick on Raymond, 2% higher, 2017. I also see a green tick on Sun TV, 4.5% higher, 570. So these are the gains that I'm seeing. On the loser side, there is Container Corporation, 2.5% lower, 662. There is RCF, 3.5% lower, 109. And there is City Union Bank, 1.6% lower, 127. These are the numbers that are in the pre-open trade. Nifty is down 42 at 19,385. This is how pre-open trades are shaping up. Now let's go back to Akshay and see what he is watching in pre-open trades. Akshay, anything that catches your fancy? Nifty now definitely below 19,400, 390.
Just going by the pre-opening session, what we believe is that metals might continue their uptick, because if you look at the trades which came out on Friday, one is Jindal Steel was clearly stood out. It was in the limelight. It did stage a breakout in intraday trades. So we can watch Jindal Steel, how it opens today and how it plays out. And as you said, Hindalco would be one more counter, which you said is up in the pre-opening trades. So if it does trade above 470, that's a positive indication for Hindalco, and we might see further gains during the day. So the first 10-15 minutes, I would be watching how the metal space would be playing out. Banking still very delicately poised at the key support. So I would probably wait for the first first half hour, 1 hour of the day, and see how it is shaping out at the 44,000, which is a key support level for banks. And tomorrow being a holiday, there is a good chance we might see some respite in the market, considering the fact that some short positions have been heavy before the holiday. There can be some bit of minor short covering, which can just see a kind of an intraday support for the Nifty as well as for the banking index as far as day trading goes in the indices.
Let's get Sunny in. Mr. Agarwal, there was this, feeling that given the deflationary numbers that are coming out of China when it comes to the month of July, both exports and imports slumped in high teens. One would imagine that metals would be in problem, but we've seen a very, very sharp rally coming into domestic metal plays. What explains this enthusiasm, and what would be your top pick as far as domestic metals are concerned, sir?
Yeah, so everyone knows that metal is a global cyclical play, and of late, the narrative of recession, especially in the Western world like US and Europe, is dying down. So, in fact, people are talking of earlier the GDP growth rate expectation of US economy was 0.4% for calendar year 23, and recently the US Fed has went on record to say that the economy will grow by 1% in calendar year 23. And on the top of that, China is trying to support their economy by boosting consumption and supporting the property market. So these are the two factor on fundamental side, which I believe is driving an optimism on metal side. And one more factor which is linked technically is the correction in the dollar index. So if we see dollar index is hovering near the band of 100, 101. And historically, we have seen that there's an inverse relationship between the metal prices and dollar index, and hence metal stock prices also. So that is one of the factor. And one more factor, we did study on metal a few months back. So in terms of valuation, all the domestic metal companies are trading close to the long-term averages. So if you remember, financial year 22 was one of the landmark year for all the metal companies where they have posted robust number. Then FY23 was the back to normalization year, where the profitability on a EBITDA per ton basis have returned to the normalized level. And in terms of valuation, also all the metal companies are trading either close to their long-term price to 1 year forward price to book or 1 year forward EV to EBITDA. So all these factors are playing out for the domestic metal companies, and at the same time, the way Indian economy is growing, people are expecting that the lackluster demand on export front may be partially offset by the healthy demand on the domestic front. And my top picks within this metal sector remains Tata Steel, obviously, on the ferrous side, Hindalco on non-ferrous side. If I would like to go on a PSU side, I would like to go with a sale where the valuations are very comfortable. And other offset of metal companies like pipe companies, wherein the Welspun Corp, Jindal Saw, which have got a robust order book, Ratnamani Metal, again one of the very rock solid business on the metal pipe side. On a smaller side, we like the companies like Sham Metallic, where there is a huge capacity expansion which is going to get completed, and we will see the benefit over next 6 to 8 quarters. So these are the few companies which we like in the metal sector.
Right. So we'll stick to Tata Steel and Hindalco because they have a presence in the F&O space as well. Very well put, Akshay. Coming back to you, we saw a fresh closing high on Jindal Steel and Power on the charts when it comes to the metal space. A very high beta counter. Where do you think that's headed?
If I look at the chart structure of Jindal Steel and Power, the all-time high levels for the stock, we saw this somewhere way back in 2010. This was where we are almost. So 790, 800, all roughly coincide around the 800 odd mark, 700 odd mark. So this is a very crucial zone for Jindal Steel and Power because we are revisiting this level almost after a decade. You might see the momentum today in intraday trades because it did see some strong buying action on Friday. So the carry forward momentum should be good for day trading. But if you're thinking of getting into this counter positionally with a perspective of a month or more, then the counter is placed well, but just for a fresh entry or just to get the best rates on the technical charts, I would advise as a positional trader around 600, 625 on the lower end. Yes, it's on the lower end if you're a positional trader because when the stock revisits its level after 10 long years, 13 years I may say, it's a good chance that around the 700 odd levels would be an area, 700, 710 roughly, which might see some bit of profit taking because people obviously have been stuck in this counter for long. So I would say that trade this on a day trading basis because the momentum is there. Maybe as a BTST, if the momentum continues around 700, 710 is where you take your profits. If you're looking at metal counters, then Tata Steel and Sale are the other two bets which I would be looking forward to from a slightly positional basis because the placement on the charts in these two counters too are promising.
So, ladies and gentlemen, it's a confluence of opinion when it comes to the metal space for Tata Steel and Steel Authority of India, as far as our two very well known and fabulous analysts are concerned on the fundamental as well as technical side. Let's come back to the pre-open trade. Nifty is down 44 in pre-open at about 19,383. So we see a slip down happening, and apart from that, let's see which are the stocks that have settled in the red and the green. As far as Reliance is concerned, it's settled 0.3% lower at 2539. ICICI Bank 0.4% lower, 949. HDFC Bank, we are tracking a short position suggested by Akshay, 0.5% lower, 1611. Remember, it's very close to its 200 DMA. As also flat openings in Infosys, ITC and LNT. So there isn't much of support that heavyweights are providing the Nifty. In fact, they are opening a tad lower. Let's look at the FNO stocks. I want to see what Adani Ports had settled at, down 2.5%, 781. Adani Enterprises down 2.3%, 2480. So these are the two stocks that are reacting negatively to disturbing news coming from the auditor side. Apart from that, ABB and State Bank of India are also opening 0.5% lower. Let's look at stocks which are trading in the green in the pre-open space. ONGC, of course, crude oil prices at 5-7 months high, 1.5% higher, 180. Biocon 0.7% higher at 258. So these are the prices. We'll wait for the opening tick and then take a call on what to do. But coming back to Akshay, Akshay, very strong rally in the pharma space. What would be your top pick based on charts?
Pharma space, as you said rightly, has shown a stellar rally in the month of July and also continues in August. Lately, we have seen some bit of profit taking in the pharma space, but some of the counters which still are on my radar, which I would like as a buyer, would be Cipla. If you recollect, Cipla was one stock which clearly was an outperformer. In fact, if you look at the charts also on Friday's trading session, it did show some good promise because last three trading sessions, it's always been kind of around 1250 odd levels plus minus 10 odd points from those levels. So the chart structure is strong. You have a powerful breakout at 1190. So I would be keen on buying Cipla here if we are looking at the pharma space. The stop loss on this trade would be roughly around one below 1200, and I would target around 1310 to 1325 on the upside. The second stock which I would look at in the pharma space is Biocon. Now, Biocon, it was kind of a late entrant in terms of the run-up in the pharma space. The results also were more of a dampener for Biocon because after the results, the stock did show some bit of some profit taking. But the broader chart structure is still positive in Biocon. I'm seeing a strong support at around 250 odd levels. And I believe it's just in a consolidation zone for the time being. Positionally, with 1 to 1.5 months time frame, Biocon should again reattempt to get past its recent high of around 270 and head for 290 odd levels. So you can buy Biocon, accumulate it in the range of 250 to 55 with a stop loss below 240 and a target of around 280.
Okay, Cipla and Biocon look good on charts. Let's get Sunny's view in. Sunny, I have 45 seconds for the opening ticks. Which would be your top pick in the pharma space? Requesting you to be precise a bit.
Yeah, so within pharma space, we like companies like which are growing at a relatively faster clip, like Mankind Pharma. There we find a lot of good opportunity of growth. Another company which has posted a robust set of number, which was totally pleasantly surprised, was the Gland Pharma. So Gland Pharma has posted a robust set of number. That is a company where we find the valuations are also comfortable. And on the incumbent side, we like companies like Sun Pharma, Lupin, Cipla. All the companies have posted a decent set of number. One company which we like where we see a turnaround in business is a Shilpa Medicare. So, if you're tracking the pharma company, we all know that there is a shortage of oncology drug in the US market, as many drugs has gone off patent, and many
To
branded
intrude
players in
on
the US
you,
market.
pre-open trades are in front of us. Let's look at where the markets have opened. Down 46 at 938, 19,378 as far as the Nifty is concerned. The Bank Nifty is opened about 114 points lower at 44,000. IT is in the red, and so is the Nifty 500 index. Let's first look at what the heavyweights are doing. Okay. The top loser at the moment is HDFC Bank. So Akshay's short trade is working really well. 0.6% lower, 1608. Remember, HDFC Bank is the highest weighted counter both in the Nifty and the Bank Nifty. Reliance 0.3% lower, 2537. State Bank of India 0.6% lower, 571. In fact, apart from ITC, which is 0.25% higher at 450, I don't see a single tick in the green when it comes to the 10 heavyweight stocks comprising the Nifty and the Bank, the Nifty. Let's look at F&O space. I am more interested in Adani Enterprises and Adani Ports. They've opened more than 3% lower. Adani Ports 775.50. Adani Enterprises 2004.48. Remember, they are facing some issues with their auditor. Apart from that, State Bank of India, ICICI Bank are in the red, 0.6% and 0.3% lower respectively. Bajaj Finance 0.7% lower at 7,010. Let's look at top gainers here. Very few. Noteworthy Biocon 1% higher, 258.50. I want to see what the metal space is doing, because we had a near unanimity when it came to the metal space. Top gainers are within the metal space. NMDC 0.4% higher, 114.25. Jindal Stainless 0.5% higher, 413. Let's look at the broader markets. It's a shade of red which is deepening further. Nifty is now down 84, 19,343. Let's first touch base immediately with Akshay. Akshay, it's a downtick on both the Nifty and the Bank Nifty. What are your immediate views? What to do?
For the Nifty index, as I said, 19,300 comes into play right now. We are almost there, 19,300, 310 as it stays. So as a Nifty, as a trader in the index, firstly Nifty, I would just wait for the next half an hour, because right now we are at the support, and there is a good chance Nifty can recover today from the support, because we are testing this almost after 5 to 6 trading sessions. So any uptick from here, maybe you can have a conditional buy. Let it recover above 19,325, 330 basis spot. That will be the first buy trigger for you, just as a day trader. So if it crosses 325, 330, take a stop loss of day's low, place your buy trade for a 40-50 point upside take in the Nifty. That is how I would be looking at Nifty. As far as the banking index goes, I would stay away from the bank index at this point of time, because we are staring at a head and shoulder bearish breakdown on the Nifty. And as it stands right now, we are entering into that breakdown zone, because we are below the 44,000 mark. So banking, if I were to take a trade at the current point, would be a short. I would stay away from the Nifty index and wait for in case I do get a pullback or not. But banking clearly as it stands now is a shorting candidate.
Very succinct and precise view coming in from Akshay as far as the technical charts stand. And of course, we see the downtick on both indices now getting to be stronger for the bears. So the Nifty is down 98 points, 19,328, and the Nifty Bank is down 232 at 43,966. Let me just do a broader market check. Let's look at the other indices. So we track 19 indices, and all 19 are in the red. Surprisingly, the Nifty Metals Index is the top loser, 1.5% lower, 65.90. Realty, PSU banks, auto, mid cap, pharma, all of them down in the green, down in the red. And I see sustained selling coming in on a lot of software that I track. Hard to find a winner here, but let me at least make an effort. Let's drill down in the high beta space. Remember, these are the ones that set sentiment, and since they are cash stocks, it's hard to go short on what is extremely bullish. HBL Par, 2.7% higher, 228.50. Medanta, Angel One, and Policy Bazaar. Remember, these are very high beta stocks, favorites of traders, and of course also a lot of cash investors. Within high beta, which are the ones that are losing ground? Nika, 7% lower, 135.30. India Cements, remember, very sharp rally last week, 3% lower. India Cements, I see a price of 245.50. Zomato, Manappuram, both down 2% each. Punjab National Bank down 1.9%, 61.40. Okay, losses are now mounting. Nifty is down 130 points, 19,300. Nifty Bank is down 350 points, 43,844. Let's look at the advanced decline ratio within this space. I won't be very happy with it. Within Nifty, out of 50 stocks, only 10 are in the green. So the advanced decline ratio is 1:4. I just want to see what's in NSE 500. 200:300. So the advanced decline is 2:3. Okay, and it gets progressively worse when you look at stocks which are indices which are taking a sharp beating. Let's look at the Nifty Bank. A moment, please. Nifty Bank has 12 stocks in it, and I see an advanced decline ratio of 0:12. So all 12 are in the red. As far as the PSU banking basket is concerned, all 12 are in the red. So not a good space to be today morning if you're a bull on the last street. Let's again go back to Akshay. Akshay, where are you seeing breakdowns apart from Bank Nifty?
Apart from Bank Nifty, as I said, majorly it will be the banking stocks which will take the lead on the downside, because the downside, if it triggers from here, will be more driven by Bank Nifty. So initially we spoke about State Bank of India. If you look at State Bank of India, 565 is where it roughly trades around basis spot. So there's the breakdown from an inverse flag and pole pattern which we have seen, and this targets on downside 555 levels. So that's a decent downside which you can expect in State Bank of India. So you can short this even at the current levels with a stop loss above 575. That will be a proper stop loss. If you're taking a day trade, the stop loss will be above your day's high. So banking space, that's one counter I would see. Second is IndusInd Bank, again is placed at its high levels, a possible double top under formation, and the support of this double top works around 1350. So that's the second short candidate. In the private banking space, 1380 is roughly where it trades. So you can take a short with a stop of 1425 with a target breaking down 1350, which will roughly around 1340 to 1325. So these two will be my top short picks in the banking space going by the current readings.
Right. So this is how the market is. It's slipping fairly sharply. Nifty's lost 19,300 to bulls. 19,283 in front of us, down 145, and Nifty Bank down about 375, 43,827. Let's now get Mr. Agarwal in the conversation. Sunny, not a good opening that one would expect on a Monday morning. Fair enough, we've had a very sharp uptick, and it's okay for the market to take back some of that party scene that we had in the past 4 months. Anything that is coming in your buying zone or close to your buying zone, or something that you are at least watching to catch that knife if it falls?
Yeah, so definitely that's a good buying opportunity. The correction in the market is always a good buying opportunity. I would like to focus on a few companies like Tata Motors, where the outlook is pretty healthy. Stock after a long time has corrected below the 600 levels. So Tata Motors is on my radar. One more stock which is on my radar is Ultratech Cement. A pretty healthy outlook for the entire industry for financial year 24. So Ultratech has also corrected from the levels of around 8600, 8700 to currently trading around 8000 levels. So Ultratech is the one stock which I would like to add in my portfolio. Maruti is one of the stock which I would like to add in my portfolio. We have seen a decent correction in Maruti, and obviously HDFC Bank, ICICI Bank, where we have seen a consistent correction during the last 1 or 2 weeks. So these are the few stocks. On mid cap side, one stock which I like is Arvind Limited. So if you see, the company is currently trading at around 140 to 143 rupees, and the market cap is around 3700 crore rupees. What I believe is that the worst is over for this company, and next 2 3 quarter we may see a consistent improvement in the margin. So their technical textile business continue to do well, which is growing at more than 20% CAGR. So that is the one showstopper for the company. And other businesses like denim and textile business, there are basically twofold advantage which we are seeing for Arvind Limited. One is the correction in the input raw material prices, especially cotton. So cotton is trading at multi-year low. At the same time, for export, the ocean freight has corrected to the pre-COVID level. So, and we all know that for the textile export market, December quarter is the peak quarter in terms of demand, and the shipments start to happen prior to September. So what we will see is that over the next 2 to 3 quarters, there will be consistent improvement in the margin for Arvind Limited, are trading at a very reasonable valuation, 7 to 8 times price to earning multiple 1 year forward. So I feel the fair value of the Arvind Limited is around 180 rupees, and one can look at this company from medium to long term perspective.
Right. Let's draw Arvind Mills chart for the benefit of our viewers. Let's make it a daily chart. And the price that you see today is 141, fairly in the affordable range. And if you see the price to earnings ratio for Arvind, I think is fairly stable. I think it was 11 if I remember correctly. Just a moment, please. Yes, it's 10. So given the fact that markets have rallied very sharply, there hasn't much happened on Arvind apart from the fantastic rally that you've seen from April when the stock was at 80 bucks and now at 140. Let's get Akshay into this conversation. The chart in front of you, Akshay, as far as Arvind is concerned, what is it telling you? 10 years, the stock is compounded at 9.5%, so nothing much there.
For Arvind Mills, if I look at the technical charts, if you look at the recent highs, that was somewhere in the year 2022, the top was roughly around 145 to 150 zone. We are trading around 141 right now. So as the chart reading goes, it's trading near a resistance point, which is a vital resistance. It is an overbought stock in terms of the momentum readings and slightly vulnerable for short-term profit taking. So from a positional or a long-term perspective, yes, it would not make much of a difference because, you're paying for a larger move. But just for timing this trade, I would say at this point, I would not be personally comfortable taking the trade because multiple resistance points are placed here. Even if it moves up, the stock is vulnerable for profit booking around 145, 150. So I would wait for a dip around 120 odd levels to take a buy trade slightly from a 2 to 3 month perspective. Even if I were a trader in this, I would wait for a dip till 127, 130 odd zone to take a buy trade. So I would advise wait for the time being in Arvind Limited, wait for at least a dip till 125, 127 to take a buy trade from a 10-15 day perspective.
Fair point. Markets are composed of opposing opinions, and that's what makes them so interesting. Time to bid goodbye to Mr. Agarwal. Thank you so much, sir, for the time that you spent with us on Market today at BTTV. Let's again go back to what the charts are saying. And Akshay, this is for you. The second support level on the index. Just a moment, let me draw the right chart for you. Just a moment. Nifty is down 140 points, 19,287, and it's also slipped below the second support level. So I'm sure there's a huge short build-up that's happening on the option space. Just give me a moment and take that data out for you, because Akshay is here. Let's look at the options chain. Anything that catches your fancy here, Akshay? How about 19,200 put?
Yeah, definitely. But to be honest, I would be buying puts in Bank Nifty rather than Nifty, because Nifty is at a very delicate level. It's just broken down below the support zone of 19,300. So as a trader, yes, you can buy a 19,200 put, but maintain a strict loss about stop loss about days high, because these are delicate points for the Nifty. It's just kind of drifting below the important support level. But I would be more comfortable taking a put in the bank index, because there is a clear breakdown of a bearish head and shoulder pattern as it stands right now. So the comfort more would be to buy a 43,500 put in a bank Nifty. The stop loss, if you are a day trader, again would be about days high. I would be more comfortable with a stop loss above 44,400. And if the bank Nifty slips down from here, you can anticipate it somewhere around 42,500 to 42,700 positionally. For the coming week, you can have a target of around 43,400 on the lower end.
Of the sector in the banking space that's doing pretty well. These are the old world private sector banks. Tamil Nadu Mercantile Bank in focus. Let me just check with the PCR. I'm sure Akshay, you have the chart in front of you. Why don't you just start pouring it over? And I'll check with the PCR if we have the chart for Tamil Nadu Mercantile Bank, TMB. If you can check. Very strong traction coming in as far as the price is concerned. Let me just see if we are able to draw it. Meantime, Akshay, would you want to comment at a time when you are seeing breakdowns in bigger banks? Yes, we have it in front of you. 3.8% higher. Over to you, Akshay. Second day of gains, and very strong ones at that.
Right, Shailji very rightly pointed out. This is clearly defying the Nifty, Bank Nifty. It's in fact, if you look at the charts, it's just broken out from a resistance of 460. That's a very positive development for this bank. So I believe it has nothing much to do how Bank Nifty would play out during the day. It's clearly a buy because of the breakout, and even if on the slightly longer term charts, it's kind of a rounding bottom formation breakout at 460. That's a very positive development. Positionally, this sets it up for a target of around 500 on the upside. Positional would be a time frame of 1.5 to 2 months. Even for trading gains, the momentum is there in the stock. So even if Bank Nifty were to recover in the second half, or any recovery would happen, this would bode well for the stock. Trading targets would work out till 485, 488. You can buy with a stop loss of days low in Tamil Nadu Mercantile Bank. Positionally, for, as I said, the larger targets would have a stop loss of below 440.
Right. Two or three other interesting things I want to point out. This is a very old banking franchise, but remember, this got listed on 15th of September last year. So we have about an 11 months time history as far as the listed price is concerned. But here is the interesting part. The IPO was at 525 rupees per share. So despite the very sharp rally that we saw from Friday, a low of 445 to a high of 480, the bank is still below its IPO price, and probably that's one reason why you see this fantastic rally that's coming in. The stock ticking along merrily as we discuss it. 482 now, very strong volume over the last two trading sessions. This bank also had some income tax issues to deal with. So the sentiment fundamentally was fairly weak, but we see a very, very strong breakout coming in. This price was last seen on November, January of 2023. So it's an 8-month high on the stock. And Akshay, while you are at it, CSB Bank as well, strong support, strong move coming in, down 3 days and probably an upswing, 299.
CSB Bank, well, even this, if you look at the broader charts, it's placed very strongly. In fact, if you were to look at the monthly charts or the weekly charts, this stock is trying to move out from the 290.95 zone because it's been consolidating here for a pretty long time. I would be playing this stock slightly from a medium-term perspective with a time frame horizon of 2 to 3 months, where the targets work out till 350 on the upper end. I would place a stop loss below 270 on these trades. If I were trading on the stock, see, it's more in a consolidation zone. It might kind of bump up a bit till 302, or kind of just drift down to 285. So short-term signals are not very encouraging or clear in the stock. The risk-reward payoff is not working well. But if you're investing with a 2 to 3 month perspective, definitely this is the stock to buy or look forward to. Targets 360 or 350 plus with a stop loss below 270.
Right. Let's look at the broader markets back again. And Akshay, you had pointed out before the markets opened that it's going to be a bit of a disaster day for Nifty Bank, down about 0.9%, 400 points lower, 43,800 in front of you, and Nifty 50 down about 161 points. Remember, it's not even half an hour to trade, and about 19,267. These are also fairly strong support levels for the Nifty when it comes to technical charts and option chains. So, and as Akshay had pointed out, he was just looking for some kind of a reversal after the 800-point fall that we've seen on the Nifty. So you need to watch out on that. Plus the fact that tomorrow is a holiday, so you just might see a fairly decent short covering coming in, and then you would have Wednesday and Thursday. We again go into the weekly expiry mode for this particular week, which is August 17th. Let's look at sub-talks. Akshay, the problem that is it's very hard to find ticks on the long side. I'm looking at the FNO space. You won't believe 178 futures are down. Just 9 futures are in the green, and one of them I am sure is your favorite, which is Power Finance Corporation. Remember, record highs coming into this stock for weeks and months together. It's at about 265. Would you care to comment what the charts are saying for the long term? Because short term it looks really overheated, Akshay.
Very well said, Shailji. This is very overheated on the short-term parameters, but there is no stopping the stock. I mean, if you look at the stellar rally the stock has posted, it continues to move on and on. It hasn't much have to do much with how the indices are trading. So I believe long-term still positive. Short-term you might have some jerks here and there, but the way it is positioned, this is here clearly moving 300 plus with a 2 to 3 month time frame. Your support base for this trade would work out somewhere around 245. So if you are comfortable with a positional trade with a 2 to 3 month perspective, or you're holding the stock, do not book profits. I would say still more steam to go. 300 plus is where I look in the stock. Even for trading parameters, this is overbought, but there it has a very strong support at 250, 258 odd levels. In case you get a dip, that's a buy candidate again. Momentum is intact. So yes, be invested in the stock. Look to buy this from a positional perspective.
Actually, stick around with us. Let's focus towards corporates. As you would know, there's not much happening on the long side when it comes to markets, so might as well take a detour and see how the hotel industry is shaping up. In front of you will be a daily chart of a very well-known mid-cap hotel stock called Royal Orchid Hotels. And we'd welcome Mr. Amit Jaiswal. He's the Chief Financial Officer at Royal Orchid Hotels. Let me just go through the earnings that have been declared a couple of days ago. Strong traction on net sales, up 14% at 69 crores for the quarter gone by. Quarterly net profit at about 10 crores was down 12% year on year. EBITDA at 23 crores, down 4.6% year on year, and a mild decrease in EPS. Here is the good part. As far as the stock price is concerned, it's appreciated 69% over the last 12 months. Mr. Jaiswal, it's a pleasure to host you. Welcome to Market Today on BT Television. Fantastic work that we've seen Royal Orchids do over the last 18 to 12 months. However, the past quarter was a bit weak. Would you care to explain how this weakness crept into profit and profitability, sir?
Thank you, Mr. Bhatnagar. Let me tell you, see, it's the matter of perception, how we look at and how the market looks at, the businessman, how he looks at a thing and how the market perceives it. It's just a matter of perception. If you really look at, you are comparing our result for this quarter with a first quarter of last year. Now, if you go back last 15 years, the first quarter of last year was the best performance in last 15 years. Forget about COVID. Last 15 years, industry has not performed like that. Number one. Number two, last year, first quarter, we had outperformed every peer in the industry. Okay. So these are two very vital points. Now, last entire year, our company, Royal Orchid Hotels, did exceptionally well in all the 4 quarters. Then we realized that we need to now do little bit of expenses on our maintenance of the properties. Last year, first quarter, we were, operating, although the level of operations went up, but we were operating with a very skeleton staff members, thinking that we are just out of COVID and we never knew that what will be the future of the industry. At that time, there were a lot of confusions and, miscalculations and were there. But then after years of good performance and the way forward, which is looking very bright, so we thought that now we need to retain our employees because industry had opened up. So we had to revise their salaries. Number two, we had to achieve the operational excellence, which cannot be, undermined or compromised. Thirdly, we are growing very fast. To support that kind of growth, see, if you really look at it, in last quarter, that is last first quarter of this financial year, we have opened 13 hotels with 755 keys. So, the expenses which are booked in our P&L, although we look at it as an investment for the future growth. We will be opening almost 1,000 rooms over, almost, around 15 hotels in next 6 months. That is before March 24. So all these need support, and every support comes at a cost. The benefit of all this work we will get in next financial year. So that is our viewpoint and the explanation I thought I'll share with you guys.
Absolutely, Mr. Jaiswal. What you've done is basically sacrificed short-term growth in the hope that long-term would be phenomenal. I have said in my opening remarks that one of the most spectacular mid-caps that we've seen over the last 12 to 18 months has been Royal Orchid Hotels, and perhaps this would be the right time to add the stock to your portfolio, but we'll leave that comment to Akshay. Let's focus on the financials a little bit more. Are you taking more debt to fund these new hotel properties that you are opening up over the next 12 years to 18, the next 12 months to 18 months?
Mr. Bhatnagar, we have been following an asset-light strategy for quite some time. We are not going to own any hotels. we are adding more and more on a managed basis, wherein our top line moves down to the bottom line. Okay. But at the same time, now we are getting into
Yes.
little bit of, revenue share model, wherein with a very minimal investment, like if it is a 80-room property, somewhere around 5 crores we invest in the security deposit and the working capital to get the hotel going, and where the return is little, almost the double of what we get in management as management fees. So that also we are trying to exploit. There are a lot of opportunities in the market, and for that we feel that we have now good internal cash accruals. As well, if we required some good opportunities, some bigger hotels comes on revenue share or leased model, may go for to take little bit of debt, but that will be not very any high kind of debt.
Right. Mr. Jaiswal, when it comes to expenses, the ones that you mentioned, which were, sprucing up your property, adding fresh HR talent to your existing employee base, and of course, adding new properties, have you done most of the expenses for the current financial year? And from now on, do we see improvement in margins as well as profit?
Yes, definitely there will be improvement in margins, because all of a sudden, the kind of chunk which came up in the first quarter, because as you know, historically the hotel industry, how it works is the first half 40% and second half 60%. Out of that also, first quarter generally it is dull, although the leisure hotels only do well. Yeah, and our revenue from leisure hotel is around 28%. Balance 72% is the business hotel. The business hotels are little down in the first quarter. So keeping that in mind, we try to invest some money into the upkeep of the hotels, as well as we have invested some money in training. Training is a very vital thing which we do, although the cost will come in these 1 or 2 quarters, but the benefit of this will come in a long run. Okay. But however, let me tell you, our cost is not going to go up. We have started working on controlling the cost. First quarter we will given little free hand to our ops guys, but now we will be controlling, and the cost will not go up like this.
Right. So, Mr. Jaiswal, I'm a very, very frequent traveler to a lot of cities in India, and I frequent Bombay quite a lot. I know for a fact it's impossible to get a fairly decent hotel at a decent price. Either the price will be fabulous for the hotel, not for the guest, or the property would be subpar. The smile on your face says that you agree with my statement, and possibly you are in the best industrial industry at the moment as far as India's booming aspirations are concerned. Tell me, what was the capacity utilization over the last 6 months, and what are you aiming at over the next 2 quarters, sir?
See, as far as the capacity utilization is concerned, we are at the optimum. We are at 78%. And it may go up by couple of percentages, but beyond 80%, it is literally very, very difficult. Barring few of the hotels, most of the hotel beyond 80% is very difficult. So I think we are at the optimum of as far as the utilization is concerned. But yes, we are looking forward to the increase in the rates further, because the kind of demand we are seeing in the market, and the kind of the way India is growing, our economy is growing, I feel that we are very short of hotels, and definitely our rates are further going to go up. I'm looking at 10 to 15% growth further as far the rates are concerned. And let me tell you, the industry will do very well for the next 3 to 4 years. Absolutely, it will be, like rocking. I will use the word rocking industry, because, there's huge demand in the market, and you try to book any leisure hostel, you will not get it on weekends. Business hotels are doing also very well. So actually, right now, the things are very bright, and hopefully it will stay for quite some time.
Mr. Jaiswal, I am sure what you say is music to the ears of shareholders of Royal Orchid Hotels, as also many other hotel chains. But as a traveler and as a serious tourist, I find your conversation very, very disconcerting. But be it that is me, it's okay. There are very, very few industries which have seen the pain that yours has in the last decade and a half. Very, very capital intensive, and a lot of pain that you went through during the COVID phase is being very rightly rewarded both by shareholders as well as business travelers. It's a good space to be. For our investors and viewers, could you please tell us same time next year? I'm talking about August of 2024. What is the present room number that you have, and how many keys will you add over the next 1 year, sir?
See, right now we are operating around 5,600 rooms. And by next year, August, if you tell me, we should be somewhere around 7,000 rooms.
Okay, so 1,400 fresh keys you'll add over a period of 12 months. And so how about geographic expansion? Where do you see the maximum demand coming in when it comes to these 1,400 keys? Where are the new steps that you are taking? And where is fresh capacity expansion coming in at existing properties?
See, right now, as we talk, we are operating around 94 hotels, and it is fairly distributed entire India. We are little weak on the eastern side of India and the northeast and the eastern states like Odisha and Andhra and all. So there we are focusing to grow our presence. We are definitely trying that. We opened our first international hotel last month in Sri Lanka. So we are also looking to capitalize on some opportunity internationally if we get. But of course, it's a total asset light strategy. We are not going to invest any money. And there are, right now, if you really look at it, places like Ayodhya, so there are a lot of opportunities which are coming up, which were not heard of in last 5 years back. If you look at it, these places were not heard of. But there are a lot of opportunities which are coming. Demand also is coming. India has grown into a very good leisure destination in after COVID. So that is one good news for all of us. And we are also trying to exploit the places where we don't have hotels, where we can have little leisure destinations and all. And as far as business destination is concerned, we are Orthodox India. A lot of cities where of course Bangalore and then Bombay and Gurgaon, Delhi. Gurgaon we have a hotel. We opened last year. We are trying to look for opportunities in Gurgaon. We have the industry has got a lot of capacity there. So like this, these are the places where we would like to get into and exploit the situations.
Right. Mr. Jaiswal, like I had mentioned earlier, there's not even a shadow of worry on your forehead. It's one of those wonderful Goldilocks phases that a particular industry is growing. And no matter how much room capacity you build, no matter what you keep in terms of price, I'm sure a lot of customers would come knocking on your doors over the next 1 year or so. I stay in Delhi, and I can assure you it's difficult to get a 5-star room now, given the G20 space that we are seeing. And of course, as you mentioned very well, leisure and business. Anecdotal evidence, go to any 5-star coffee shop in Delhi, it's standing room only. Wait is about 30 to 40 minutes. So I agree with you, and since I travel a lot, I keep a very keen eye on rack rates. You are going through a very, very good phase, and I'm sure your shareholders would be fairly thrilled over the next 5-7 years. Ladies and gentlemen, that was Mr. Jaiswal. He's the CFO at Royal Orchid Hotels. Current numbers, that is the first quarter gone by, was a bit painful because the company invested fairly substantially into sprucing up its properties, adding more employees, and laying the groundwork for the coming quarters and the coming years. Thank you, Mr. Jaiswal, and here's wishing you all the best as far as Royal Orchid is concerned.
Thank you, Mr. Bhatnagar. All the best. Thank you.
Let's get back to the market. Thank you. Let's get back to the markets, and we've seen a nice bounce back coming in from day's lows. You would see 191260, 19260 as an intermediate low for the index. Remember, this was also the most recent low that the Nifty had stuck. It's retested that level. Let me show you the level that it has retested on the daily charts, and that's something like the lowest that we had seen on 3rd of August, which was 19296. The index is at 19297 at the moment, so that test is happening, and what is supporting the index as of now is Infosys and Reliance, or as far as index heavyweights are concerned. 2559 on Reliance, that's contributing 12 positive points on the Nifty. And apart from Nifty, apart from Reliance, you have Infosys, which is helping in the green. So these two stocks are ticking away merrily. Infosys is actually still down 0.5% at 1378, but the day's low for Infosys is actually 1365. So a bit of recouping from that end, and of course you have Reliance Industries now ticking 0.7% higher, 17 rupees higher at 2564. So these are the two stocks that are helping the Nifty recoup from its intraday lows, as also lows over the past 2 weeks. That's happened. The other thing I wanted to show you was the pullers and draggers. So HDFC Bank is still down 1%, 1600. State Bank of India down 2%, 562. TCS down 1%, 3480. Tata Motors down 2.5%, 596. ICICI Bank down 1/3%. What are the stocks that are doing fantastically well despite the broader weakness in the market? We'll take a look at them as well. Let's look at new highs, if any, which have come into the market. A moment, please. Yes, we have a fresh 52-week high on Coforge. It is an IT stock, 5,300 now on the price, 0.5% higher. Mapmyindia.com, 0.5% higher, 1,700. Of course, ONGC and Oil India, these are two government PSUs ticking away merrily in the green because of higher crude oil prices. That's what is happening. Reliance is providing very, very good support to the Nifty, and I see TMB Bank, the one that we had discussed at 487. Remember, we had discussed it at 480. Let's look at the high beta space. Let's look at defense. Masstock is now 3% higher. Wow. Remember, this is the highest beta at 1806. Garden Reach Shipbuilders 4.3% higher, 607. And Cochin Shipyard up 4%, 672. So that's ticking very well in high beta. Let me tell you what's happening in the railway space. Okay. HPL Power 3% higher, 228.95. KEC International down. Let's ignore this. Jupiter Wagons, the gentleman was with us on Friday, 4.6% higher, to 58.50. Let's look at the PSU basket in general. About 70 stocks listed here, and the top gainer is JK Bank, up 5%, 78.30. We mentioned the three shipyards, Masstock, Cochin, and GRAC. PFC, as discussed by Akshay, up 1% at 266.20. So this is how we see the market at around 10 a.m. ladies and gentlemen. Remember, tomorrow is a holiday. We've seen 3 continuous weeks of selling pressure on the Nifty. Some sort of short covering should happen today. We've tested the low of 3rd of August in early morning trade at about 19,260, from where the Nifty is bounced back to above 19,300. Reliance and Infosys are up in the green, and the mood in the high beta space is improving. So those are the broad things to talk about. 19,300 call for the next weekly expiry probably should be looked at, and with that we'll draw to a close as far as this show is concerned, but remain glued and linked into Markets Today on Business TV television for Business Today television for all your requirements, short-term, long-term, medium-term of stocks. Thank you for joining us, and have a nice day and have a nice holiday tomorrow. Happy Independence Day to you all.
Welcome our guest on the show today and find out more about the policy. So we have with us G. Chokalingam. He is the founder and MD at Economics Research, and we also have with us Mr. Amit Somani. He is the senior fund manager at Tata Asset Management. Shail is also now with us. Shail, first of all, coming to you, what do you make of this policy, and what's really not working for the street as we are seeing deep cuts?
So the two things, Tanya, that are not working for the market are incremental CRR deposits of 10% to mop up excessive liquidity, which